You are listening to an entertainment program put together by a company called Financial Ineptitude. Anything said on this show is not an endorsement or professional advice. Would you really want to tell a court of law you were suing us because you thought taking financial advice from two idiots on a podcast put out by Financial Ineptitude was a good idea? Really? Clown hat smiley face.
Hello and welcome everyone to another exciting adventure inside the China Shop. I'm Shopkeeper Dan. With me as always is Kyle, creator of financialineptitude.com. How you doing today, Kyle?
Good, and you?
Fantastic. It's been a fun day. Fun day.
I've been told I need to put more Letterkenny references in there, so we'll see if anyone catches that.
Oh, yes. Yeah, that's what we need. More Letterkenny. Okay, Kyle, we've got a great episode lined up today. We got an amazing guest. We have Eric Mason, who happens to be a public labor economist. How are you doing today, Eric?
I'm doing very good. How are you guys doing?
What does the public need an economist for, just out of curiosity?
Well, probably not for much, if I'm being honest.
There's the honesty we love.
There we go. I push pens.
Yes. Sometimes they give me a pencil.
Yeah, right.
Maybe. Well, no, I mean, so most of labor economics is focused on public policy, trying to make people more efficient based on passing different types of policy.
And you do that for the government?
Yeah, so we do that for primarily it's for the government. You don't see a ton of labor economics just solely focused on the private sector. There's a form of economics called organizational economics that really focuses on like the industry side of how to align companies. But labor is mostly public policy.
I just the thought of the government trying to be efficient just seems like, I don't know, kind of a foreign idea to me.
Endless quest.
Yeah, like you must have the hardest job in the world is what I'm getting at.
No, it's. I luckily have math. That helps me a lot. It's more quant than it is qualitative, so at least I have some respite there.
That seems to matter less and less these days. Sorry, okay. All right, before we get completely derailed.
Yeah, so we're all on the same page.
So we've got a whole bunch of stuff that we want to ask you, but I think we probably should start with the thing that's probably on everyone's mind, and that's what's going on over in Russia and Ukraine. As a economist, maybe you have some different insights into what exactly is going on there. Why is oil spiking? Why are the markets in turmoil? It's like, why is this such a bad thing?
I think first and foremost, it's such a horrible humanitarian crisis. I think it's that's really the economic threat here. And not to belittle it, I had a mentor who was really important when I was first getting in economics, and he always reminded me, he said, Eric, every number you see is a person. Every unemployment statistic is somebody who can't find a job. I think sometimes we get so hyper focused on how many rubles to a dollar, or oil, the price of oil. That we forget that those are real people being affected. Those are real jobs. Those are real life issues that, I can look at a spreadsheet and a program R all day long, but it doesn't, remove the humanity of what we're talking about. If we look at it from an economic standpoint, it's quite a unique situation. And it's interesting because there's the news stories from an economic standpoint coming out create kind of an interesting narrative. Russia has been so heavily sanctioned after Crimea that its economy really isn't engaging with the rest of the world to begin with. So as the sanctions ramp up, there's some effects that will feel domestically, and Europe will certainly feel, and they'll be painful, but they're not anything proportional to what's going to be put on the average Russian. And I think what's important is the complete crushing defeat of the ruble. It lost 50% of its value in 10 days. My primary background is I lean more Austrian than I lean anywhere else. One of the tenets of Austrian economics is that we believe good markets maintain information of prices. So no matter how much propaganda the Russian government puts out to its own people, prices still matter. And the fact that your ruble can't buy you anything, I think is really a good way to convey information on just how serious repercussions they're facing from the broader economy.
That's a good point that you make. Like, just how devastating are these sanctions then? I mean, you kind of pointed to the ruble, but are there any other impacts that are being felt by these? Because I think when I was listening to some of the press conferences, like the reporters seemed less than impressed with that type of response.
Yeah, I mean, I think one of the difficulties for reporters who, I do have a lot of admiration for this, economists don't go to war zones.
Right.
Is that these are really difficult macro and microeconomic trends that require a pretty holistic understanding of how money and capital flows through economies to be able to properly convey their effects.
Mm-hmm.
I'll give like one of the best examples is so the rest of the world isolating Russia and not allowing them to trade with them. You may say, oh, China can pick up the trade, Africa can pick up, some countries in Africa can pick up the trade. The problem is that those economies are already at full absorption because the Crimean sanctions already forced Russia to only trade with those individual countries.
Uh-huh.
They can't absorb any more trade. So, and they're not going to cripple their own economy to prop up the Russian economy, which is fairly weak. I'll give you an example. Like the GDP per capita in Russia is about, it's in the like $9,000 range, which is interesting because the poverty line in the United States is about 27,000. So the average Russian is 3 times poorer than a poor American. Whoa. And this is that's supposed to be a world power.
Right.
Yeah, it's a sad situation all around. It really is. The sanctions compare nothing to what actually is going on the ground in Ukraine.
That's an interesting point, too, about the sanctions from Crimea. I didn't realize that those were all still in place.
Yeah. They're, right now, Morgan Stanley expects a default, a whole default from the largest industries in Russia by mid-April. And I think most economists would agree with that. It's in the most damage the ruble's ever suffered in a short period of time was actually not the Crimean or Georgian sanctions. It was actually the default in the early 90s. And now you have sanctions plus default. I really don't know how. I mean, the sanctions wiped out over a generation of wealth creation in Russia.
Mm-hmm.
That is, you're not going to recover. Their economy was already sliding, and now they're a petro state. What is the aftermath after? Hopefully, we have a peace soon. What happens afterwards from a sanction wise? I mean, they crippled their own economy. For what is really the question?
Right. The major businesses in Russia go bankrupt in the next month. What does that mean for the world economy?
It's been, in my opinion, and just one kind of person meandering in thought, is they've been so disengaged from the world market that it really doesn't mean anything. It's a car driving down an empty road. They're not on a highway.
Mm-hmm.
They got pulled off the highway in 2014, and there is an active trade. I mean, their biggest trade pull is obviously natural gas. It's hydrocarbons. I mean, there's a lot of people who believe they went into Crimea for hydrocarbons. I mean, Crimea represents 80% of all Ukraine's natural gas, or at least rights to natural gas, and it's not a surprise that's where they went, and they have been able to exploit that because Ukrainians have shut off water supplies. So there's a major canal that goes into Crimea and has turned it into back into steppe, into high altitude desert. I don't know if there's a winner. I don't believe there's an economic win for anybody here. I think it's a loss across the board.
That just makes it seem even more pointless.
Yeah. War is often pointless.
Yeah. Well said. I also like what you said too about every statistic is a person, and I think a lot of people kind of forget that when you're looking at numbers all the time.
Yeah.
So it is, especially hearing somebody who works for the government saying that. It makes me feel a little bit better about the future of this country.
Especially when you get into labor economics, it's one of the things they really try and drill into you is that unemployment. That's somebody who's doesn't have food security, that somebody doesn't know where their next paycheck's coming from, and that humanizes the data. You should always be working. Do your best to analyze the data and come up with a solution to try and help people.
So why can't we just give everybody $1 million and then everything would be fixed?
No,
I know the answer. Even I know that one. You do have on here, I should ask you about the ideal minimum wage. I'm curious to get the labor economic take on that.
So it's complicated and controversial. I think are the two words to go with that.
Okay, maybe we should skip that one then.
No, come on. You guys never shied away from this type of topic. What are we doing here?
Okay. I'm curious to know.
Yeah. So minimum wage, I think the first thing is when we say minimum wage, we should probably define what wage means. I think we all know what minimum means. So wage from an economic standpoint is your marginal propensity of labor times your price level. So you take a demand line, a supply line for the labor market, and it's right where those two things intersect.
Yeah.
Mm-hmm.
If we have any, if there's any people who have overemphasis on their love of math, it's a partial derivative of the production functions. The labor input is brought to its first derivative. Which is a fancy way of saying how much more production do you get by hiring one more person?
Right.
And you take that number and you times it by the price level. And that's how much wage somebody should be paid. So high productive workers should be paid more and low productive workers should be paid less. And the question becomes, what do we define as how less can they be paid? Do we allow the market to define it, or do we allow private industry to define it, or do we allow the government to define it? So my viewpoint on minimum wage is I really don't know if there's ever been effective policy that really uses econometrics and market analysis to define what a minimum wage should be. It feels a lot of just grasping at straws. We don't. Here's the thing: if you're looking for some controversial opinion spun throughout economics, where we have these great debates between economists, between Keynesians and Austrians and neoclassicalists, we don't, because so few people. Yeah, I know. Don't get too excited.
The economy Thunderdome.
No, there's way too much whiskey at these conferences to result in any type of sustained violence.
Oh shit! I want to be an economist, or at least work the convention.
But no, So I mean, what it really comes down to is how do we define what the minimum wage should be? But the vast majority of Americans don't earn the minimum wage, so there isn't a lot of really advanced research put into defining what the minimum wage should be. My personal philosophy on it is that, for good, able-bodied, well-trained adults, there really probably shouldn't be a minimum wage because the market's going to satisfy that anyway. So extra government policy is usually pretty inefficient.
Mm-hmm.
But I think there should probably be minimum wage for people who have certain people who have disabilities, and probably seniors, people who could be exploited by the market. I think government's job is to protect the most vulnerable members of society. A government that only protects the strongest members of society, to me, is not a legitimate government. It's just a bunch of people being jerks.
Well, I mean, would you consider the poor people that need protection?
I would agree to that. I don't agree that minimum wage elevates people out of poverty, and there's really not a lot of data that shows that. What elevates people out of poverty is increasing their marginal production of labor, and that's education. Mm-hmm. Widespread access to education and on-job training is the solution. If you just give everybody more money, you're going to increase the price level in the economy. By increasing the price level of the economy, you're going to ruin people's savings accounts. And the people most vulnerable, the people who are not investing in the stock market, which are the poorer people. Mm-hmm. So whatever economic loss we're going to take by using minimum wage, I would submit that we should actually use that to increase education levels. We should allow for easier access for low-income individuals to community college, to trades. I mean, the second highest paying occupation with 4 years of experience is welding right now, and that doesn't require a college degree. We shouldn't look to just increase people's money for no reason. It should be give them the skill sets so they can earn more money. We should do that. I'm fine with government taking a loss to provide those skill sets.
Mm-hmm.
Yeah.
I like that you mentioned welding because, I mean, we've been vocal champions of trade schools, too, for as long as I can remember. I don't have a college education. I made pretty good money working at a steel mill as an electrician. So,
yeah, I mean, those are real skills that we need. I mean, there's biggest lie you ever hear is you make $25,000 more by going to college. It's binomial. If you're majoring in a STEM field, you make a ton more money. If you're not majoring in a STEM field, you're going to make less money than individuals who go into trades.
Right.
Oh, yeah.
Plus, we've all met the bartender that has a history degree that hates their life.
Yeah.
Yes. I originally was a history major, and I decided I wanted to be able to feed myself.
I'm sorry. I didn't mean to. I wasn't trying to make it personal.
I made the same decision as you. I said, I want to be able to feed myself. Yeah.
Jesus, Dan, we're going to get your beef finally by accident.
How many economics people actually get rich, though, by studying economics?
It's funny. There's 3 million economists. There's 3 million people with econ degrees, but there's only about 22,000, 24,000 economists. And I think a lot of us just really like the math. It's a good living, man. I'll say it's not bad.
I'm not even like, what do you study with that? I mean, is that something that you can take and like make a successful career of investing, or is this just more of a like broader overall pictures of how monetary policy affects systems? Yeah, so economists are used everywhere from health. I mean, I'm sitting right here, and to my left, I have a health econ book. We're used for everything. We're kind of the applicable mathematics backbone of a lot of industries. It's actually economists who calculate health statistics. It's economists who build long-run modeling for the financial sector. Economics is just applied mathematics. We use advanced what are called causal inference tools to investigate how effects of different, whether it's policy, investment strategies, health decisions.
It's one of the most applicable degrees just because it allows you to engage, because it's math-based, in almost any field.
Mm-hmm.
I always like it because it's an objective search for truth. That's what I've noticed it to be.
Are you familiar with the South Park episode where what was that one called, Dan, with the economy, where Kyle basically becomes like the son of the economy and takes on a credit card and takes everyone's debt on?
Yes, I'm very familiar with that.
Okay. I'm just curious if that's like the Economist's favorite episode.
One of the jokes somebody always makes is that, like, there's a Harry Truman quote, which is that I need a one-armed economist because they always say on the other hand.
On the other hand.
Okay, so in your empirical search for the mathematical truths of the economy, what can you tell us about the national debt? Does it really matter?
I personally.
Yes. Yes, please. When we print money, where does that money go? I got so many questions about this, but I'll let you just get started.
You guys sent me like 4 of the most challenging questions in economics.
All right, we'll just sit back and let you finish the show.
I guess I'll hit the first one, which is who do we owe money to? The number one owner of a debt in the world, of American debt in the world, is Americans. We own our own debt. Followed by Japan. China owns about 20% of our debt, followed by Japan, then China. So what happens when we print money? You're going to get a very biased view from me. So please take that with a grain of salt.
Yes, jackpot.
Doesn't matter when we print money. And that's because the United States does not allow the practice of seniorage, which is we don't print money and pay our bills. We borrow money, and then we have the money in stock or we print it, but it's based on that borrowed dollar. And so there's always some collateralization behind it. We're not just printing new money and paying bills. That's called an inflation tax, and that's what Greece used. And that's why Greece, when it joined the EU and lost monetary-based control of its currency, it immediately collapsed.
Oh, that makes a lot of sense. Okay.
I'll ask you guys a question. If I print $1 trillion and I put it in my bid room, what happens to the value of the dollar?
Nothing.
Nothing until you put it in the system, right?
Yeah. So that you're 100% right. The monetary base is monetary supply is a function of money velocity and monetary supply. So basically, the amount of money in the economy is a function of how many dollars are printed and how fast those dollars can move. And with modern banking and modern, ACH, debit cards, EFTs, and all that, money velocity is almost infinite. If you have $1 moving at infinite speed, it's the same thing as having $13 trillion moving at infinite speed. Your monetary supply isn't growing or shrinking. Your monetary base isn't materially growing or shrinking. That's why quantitative easing has been so ineffective in the long run. It hasn't stopped anything. As long as money can move fast, it doesn't matter how much money we print. It doesn't matter how much money we spend, though.
Mm-hmm.
Yeah, I see. I never thought about it like that before.
Yeah, that's what I do. I just try and rock brains. That's my number one.
So what collateral are we using to borrow this money then?
It's actually Alexander Hamilton was the one who thought of it, which is future tax revenue is what the collateral we use.
That sounds like a promise.
That is a promise and a half, my friend. You would be correct.
I'm pretty sure that's the same reasoning I've used to get my account to zero every time I've made a stupid purchase. I've got a check coming in 2 weeks. I'll spend this money now. I'll get it on the credit card, no problem.
Wait, are you disputing the U.S. government can make stupid decisions?
I'm just saying it didn't work too well for Liberty Steel, the company I used to work for. They kept borrowing against future invoices, and they've been kind of in a rough spot since.
What it comes down to is like, if there's triple M out there, that's that new monetary theory that basically says that money doesn't matter. You can borrow as much money as you want. As long as people have confidence that you'll pay it back, it doesn't matter. And, I don't really believe in those types of spectrums. Like, you just can't endlessly borrow money.
Right.
But we should be borrowing money. We should be borrowing money for large capital investment. That cost shouldn't be borne on people this year. It should be borne on evenly throughout the entire life of the asset. And that's good private sector mentality. So City of Quincy has about $1 billion in outstanding debt. But the vast majority of our outstanding debt revolves around large capital projects as we revitalize our downtown. And To me, that's good. Obviously, I was involved in it. That's good. I'm not going to shit on my own ideas. I don't know if we can swear. I apologize.
Oh, absolutely.
Oh, damn it.
But yeah, I mean, these are good. Have good economic returns. I mean, the greatest economic stimulus we ever did was Interstate Highway Act. The best return. The market is never going to produce highway because they only get about a 2 to 3% return. But the macroeconomic benefit of developing highways and infrastructure systems, you would have to. I don't know if there's anybody who disagrees that that's good infrastructure.
Is that why you like Eisenhower so much?
I love Eisenhower. He is the absolute my second favorite president. Lincoln and Eisenhower.
I would put your Eisenhower up against Teddy Roosevelt any day of the week.
I would. Winning World War II, I feel like we just completely gloss over how awesome that was.
Yes, that's what I was telling Dan before we started. Like, he did win World War II. He gets a pass in a lot of things.
Started the American space program, wins World War II, desegregates schools, and this guy gets relegated behind, like, Warren G. Harding. That's what you say to me?
Yeah.
I tell people that's where my middle name comes from, but that's not true.
Warren G. Harding?
How did Warren G. Harding was there for Prohibition, right?
Yeah, he was early 1920s. He was right after Woodrow Wilson.
I remember watching Boardwalk Empire, and I got the impression that he was just kind of a puppet stuck in there for basically the criminal element to be able to profit off of the bootlegging.
Yeah, no, that's exactly what it was. That's like that's not really an opinion.
I was wondering how accurate that show was.
Yeah, he was put in by a very crooked regime, and it's funny because Calvin Coolidge, obviously a little biased being from Massachusetts about Calvin Coolidge, he was seen as too like straight and even, like he was seen as like the most moral, upstanding person. So they just didn't allow him to sit in any of the meetings. So he didn't know what was going on.
Oh god, we could do a whole show on presidential history, I think.
Right.
So let's shift on then. So we covered national debt, then let's talk a little bit about the Fed and Fed policy. Noticed lately that the Fed has finally admitted that they're wrong about inflation being transitory. Curious how long you've known that that's not transitory.
What's now, this is an Eric thing. This is a Journal Economics. And I actually like Powell. He's a fantastic actual economist. But like economists, we're so bad when we become have to be policymakers because we just can't read the tea leaves on stuff. It's super bad. But that's not a word. We don't use that word. When I started getting calls about hey Eric, what does transitory mean? And I'm Googling it and I'm like, wait a minute, this isn't a real word. We don't use this. We have short run and long run. Those are the two terms we use. And so I read it and somebody's like, it's short run. I'm like, that's not a thing.
It's short run. Yeah.
Yeah. So no. If we want to get real technical here, there's a very well-known economic model when it comes to public policy and the effects it has on the economy. It's made by a husband and wife economist pair, the Roma and Romer tax theory. And it's this fascinating nonlinear model that basically tells us that you have 12 quarters. 12 quarters is short run effect. Mm-hmm. And so when we're about, let's say we're coming up on the 7th quarter, you should start to see some sort of marginality going down. If it's transitory, you should start seeing inflation going down. And it posted a 7.5%. I was like, no. There was no experts in stuff like this. So macroeconomics didn't get founded until about 1927. So it's about 9 years after the last pandemic. So we don't have models that can predict any of this. So to call something transitory when you have no backup for it is a little wild. I'm like, inflation's never been transitory. When did prices start going down? That was good. Wild to me.
How much do you agree with his placing the blame of the inflation on the supply chain?
I do agree with that to a certain extent. And I think some of those issues existed well before the pandemic, and this simply exacerbated it a lot. It's one of the issues we have is the Panama Canal is having, obviously substantial issues with staying with enough water being the reservoir to fill up ships. There's another big issue, which is that when the Panama Canal expanded its size for how big a Panamanian class ship could be, the number one port on the eastern seaboard, the port of New York in Newark, they have a bridge there, and they knew this was coming for decades, and they never lifted up the bridge.
Oh God!
So now you had all these bigger ships that couldn't get under the bridge, so the ships had to stop in Kingston and be put on smaller ships, and you can just feel the inefficiency. You can feel the inefficiency of that. Like and there's all little examples of that over and over and over again. So yeah, it was absolutely, the supply chain is a huge issue with that. And it's been remedying. I love capitalism. I'd be in the store with my wife, and it's right during the pandemic, and you'd see, no toilet paper. Then a month later, there's sales on toilet paper. I mean, they were selling test kits for $30 a pop at the grocery store down the street from me 3 weeks ago. Now they're on sale for $10. Like, there's no system better at expressing demand before demand expresses itself than capitalism. But depending on the supply chain for any good, we need to get the market and the world economy back engaged before you're ever really going to see the supply chain issues dissolve. So there is certainly some inflation from that, but I wouldn't really describe that as inflation. I'd describe that more as like supply inefficiency.
Do you think there's a chance that we'll step back away from the just-in-time delivery?
Yes. Yeah, I think people are now putting value on having excess capacity. And there's certainly market space to be gained, especially when you consider how many markets in the world, how many good markets in the world rely on, are based on sequential oligopoly. So like the first guy to do something gets the biggest return. So if you're able to operate in a market where you're the only person with supply, you can actually gain some market share. So I think people are going to be willing to do that. I think you're already starting to see it, especially in like the parcel delivery service. There's always been, they're the backbone of just-in-time delivery. So a lot of those industries actually always were the opposite. They always had excess capacity. There's a very famous flight that takes off from Toledo and goes down to, I think it's somewhere in Mississippi, every night. It's an empty plane that FedEx has. And it's always seen in the industry as like the fact that plane's empty and is only full like 3 weeks out of the year is highly valuable to the company because it displays excess capacity. I think we'll see that in all industries across the board.
That's interesting. Huh. Sorry, I got lost there. Now I completely forgot what my next question was going to be.
Oh,
that's a good thing.
I was going to ask about the infrastructure as far as the whole supply chain goes. Is there anybody talking about trying to beef that up? I know like the Port of Los Angeles has been like overwhelmed for months. Just the ability to even unload these ships when they come in. I talked to some truck drivers. They spend 18 hours in queue waiting to get loaded.
Well, one of the bigger, yeah, absolutely. So there's certainly a desire to invest in the capital on that front. And I'm a nerd. I read ARPA and I read CARES Act and I read the most recent stimulus plan, which was fascinating because it was $1 billion a page. $1 billion a page. That's what the value of that bill was.
Wow.
And one of the issues we have is we're trying. There's all this backed up in repressed supply, or I should say repressed demand. And supply chains take a lot longer to develop. They're long-term developments. They're long-term capital. And I don't know if companies are willing to invest in that long-term capital knowing that eventually supply will be mitigated just through time. If you sell 100,000 iPads a day and you're getting because people weren't able to engage buy those for 2 years. So now in the short run, people demand 120,000 iPads a day. You're certainly not going to build a whole new facility because that's only a short run decision making.
Right.
So I think until we enter really 3 years after the pandemic and we start to really see that these production and demand stabilize to one another, I think you're going to continue to see supply chain shortages, which upsets me because I really want a PS5 and I just haven't been able to find one.
Yeah.
It's infuriating to me.
I really want a graphics card, a new video card, so I can build another computer, but I'm not spending $700 for a middle of the road card.
I mean, part of me loves the fact that I could get a PS5. I want to just pay like $1,000 because it's like, economics. The other part of me just like, hey, man, I had a busy day. I'd love to just play like Gran Turismo or something.
Fucking economics.
I'm angry, but I understand this.
That goddamn supply and demand.
Supply demand curve. It's real.
So the Fed is looking at increasing rates. They're easing off their asset purchases. What's the good side of all this? Like, how is that going to help stabilize things?
Yeah. So one, it will help stabilize it because it will remove some liquidity from the market, and liquidity tends to blur the lines between good and bad decision making. When you really reduce the net interest costs that happens when you have this much liquidity in the short run, it can make a bad project seem not so bad and a really good project seem excellent. And it misrepresents risk. So when you have really low interest rates, an interest rate is made up of the real rate of return that's demanded by an organization or a bank or who have you, plus expected inflation. Now, the Fed tells us to expect 2% inflation curve. Some more recent data that came out is that the long horizon inflation curve is probably about 3% or 3.16%, depending on who you talk to. So if you have an interest rate of 2% that some people are getting for their purchases, that means it's a negative real interest rate. And there's a lot of really good financial economists and financiers who do a lot of study on this, where there's negative, in the short run, we see negative real interest rates. And I'm not too sharp of a guy, so I don't really have the concept of negative interest rates. Like, what is negative money? Like, forget about like negative nominal interest rates. I understand that. But like, what bank sits down and says, do you know what? I want a negative real rate of return. I want to lose money on this deal.
We'll give you money and pay you to take money. Like, doesn't make sense.
I once read an article that was trying to explain it like people would take the loan and the bank is betting that tying up their money in a loan where they can know the expectation of the loss is going to be better than exposing it to the losses they would have.
That is a fantastic way to understand it. There's the Federal Reserve actually records this on something called ALLL, which is the allowance for leverage loss leases, which is like, hey, banks, how much do you think you're going to lose money this year? And you have to stay within guidelines for it. So I could see that value. I could absolutely see that being the case, where banks are like, well, I know I'm going to lose this money. Might as well lend it out. Because I get something back.
Yeah, it's something at the end of the day.
Yeah, right. But it creates bad decision making, or it creates, I would say, non-sophisticated decision making, which can be problematic if you start scaling up to the size of the U.S. economy. Like I said earlier, I'm an Austrian. I really, really believe that accurate pricing is important to efficient markets. And when you have this concept of negative real interest rates, it becomes very hard to properly assess what something's worth in the economy.
Okay, now you mentioned the Austrian thing a couple different times. You might need to expound on that because I have no idea what that means. Is that like the difference between Adam Smith and...
That means he doesn't believe in the boom bust cycle.
To a certain degree, I don't believe in that. I don't follow any one theory to the absolute T. I think everything's a gradient. But what Austrianism, it was founded by Friedrich Hayek, and it's the belief. One of the things that made me fall in love with the field is something called the man on the spot, and that's the belief that the person making the decision is better and smarter when it comes to what's best for him or her than all the economists in the world sitting in an ivory tower. That you're going to make decisions. If you're the person buying a car, you buying that car, you understand your personal finances better than as many people with more degrees in a thermometer. And I love that idea. I love that idea that we base our economic modeling not on some fictitious environment where you spend against when you're in debt, when the economy goes south, you spend more money, and when it goes good, you save more money, and this continuous Keynesianism where you just keep pumping money into the economy without stopping, and it always becomes a positive feed cycle. With Austrianism, it's an understanding that economists don't have all the answers. Yeah, we have some great models, and we sure as hell like to talk too much. But it's the don't laugh too hard, jeez.
He's sitting right here.
I was just looking at the timestamp.
Exactly. I love Austrianism because we don't build these invisible models of transitory inflation and all that stuff. Where it's let's see how people are behaving. Like that's what we try and do.
It seems dangerous to be an expert in a field that you're telling people doesn't have all the answers.
Hey, at least I got one thing. It's honesty.
That's pretty ballsy. I like it.
Hey, we still have econometrics, so we still have advanced statistics. So I can at least partially rely on that. Can't explain it, but I can rely on it.
Dan, I feel like we might be Austrian.
We.
Yes.
You say not we?
Well, I have studied some intro economics. I took microeconomics, macroeconomics for the business degree stuff, and I actually what I identified most with was when Eric says you've got nobody's completely right and completely wrong. It's everybody's looking at it from their angle, and while they might be wrong about big things like Keynes just constantly pumping money in. I think it's a synthesis, and I think you'd be foolish to ignore Austrian economics. They make a lot of great grounded points. Like he's saying, it's all backed up by but we looked at this, and when we looked at this, and when we looked at this.
I think it just boils down to that the economy is so much more complicated than people think.
Well, to go back to the South Park episode, because I really think that's not that bad of an example of the economy. It's public sentiment. That's really what it is. We want to get more complicated and be like, oh, it's this factor and this factor. Let me break up my LMSIS model and let's talk about short run aggregate supply and long. Listen, we can talk about that all day. It's a horribly boring thing we're going to talk about. You gotta cut me off after 15 seconds. But it's public sentiment. If people have positive outlooks, you're going to get positive outcomes in a lot of cases. It's sometimes not any more complicated than that.
Yeah, it's interesting you said that. Jonathan Baird just said that inflation has more to do with public sentiment than anything.
Yep.
Yeah.
The guy we just had on here. Yeah.
I was actually just thinking about when you were talking about the Russian businesses going out or on the verge of collapse. To me, the biggest danger of that is how the public's going to react when they see that information. Yeah, it may not have a monetary impact or an impact on global trade, but people see stuff like that and they get scared and start pulling their money. That's all that matters.
Yeah, oh, absolutely. I mean, I'm a capitalist. Capital is what drives the economy. Part of the reason I got into labor economics is because of my love of capital. It's that you look at capital, it's just, ambiguous force that moves throughout the economy trying to seek the greatest return. And then you got labor, which is only two parts of the production function, capital inputs and labor inputs. And labor is far more difficult to define, far more gray areas. It's a great field because even when I'm wrong, I'll probably bullshit my way to being right just if I talk long enough. It's a fantastic trap to fall into. But no, labor can be fascinating, especially when we start talking about how people spend, because as much as we study the economy, a huge factor of the economy is labor. So it's the economy's doing bad. It's okay, well, half the economy's labor. It's yeah. So half the economy thinks half the economy is going bad. Or vice versa. Half the economy thinks half the economy is going good. That's a positive thing.
I could see that being confusing very quickly.
Yeah. then they let the chicken go loose in the back of the Fed to figure out how much they should set rates. Throw some Margaritaville on the middle of it afterwards.
Bailout.
Oh yeah.
How much did they offer him? Some. Yeah. Okay.
I do have a question for you, Eric, or at least a conversation starter. In the Austrian view of the individual being able to make the best informed decision for themselves, my suspicion is, and I would like to know your opinion on, how much do you think marketing interferes with that?
Oh, so that's the. I love this question because I have many friends in marketing who hate me when I bring this up. Marketing is important. I don't know if marketing is marginal. Because do you know what the number one indicator of what type of laundry detergent you're going to buy is?
The price?
What you had in your house growing up?
What your mom used.
Yeah.
Oh.
Yep, that's the number one. And one of the things I love about economics is I feel like a lot of times we throw up our hands and go, I have no idea why this is happening. God damn. Okay, somebody write a paper about it and see if somebody will publish it. So marketing has efficiencies in it because marketing conveys information very quickly. The value of marketing is information. It's can you convey information? But I think people would still demand soap. I think people would still demand bread. I think people would still demand a numerous amount of goods, regardless of whether they're watching on television. So the way I view it from a microeconomic standpoint is that the big reason that marketing exists is because marketing exists. It's that because one guy markets, somebody else has to market. I think the information's material and marginal, but I don't think the actual exercise itself increases the overall economic gain of a transaction.
So our ad budget is being wasted? Is that
what I'm hearing, Dan? No, then it takes my brain right to the place of, okay, so if a marketing campaign doesn't have a monetary return, wouldn't that independent company not do marketing campaigns anymore?
What's important is the marginal return compared to the rest of the market. And again, I'm going to go wicked biased on the Austrian side because we view marginality as super important. Is that if they're gaining, doing that transaction and they gain nothing from it, but it prevented them from falling further behind, then the marginal benefit was still positive, and that was a smart transaction to go with.
Okay, I gotcha.
Everybody would have to stop doing it, and that's when it'd become meaningless.
Gotcha.
I'm going to get so many texts when this comes out from my friends just absolutely mocking me. This is going to be so bad.
All right, you ready for the last loaded question?
Yeah, sure.
What do you think is going to happen in the next 2 to 3 years with the economy?
I think we're going to continue to see pretty sustained inflation, probably I'd say north of 3% year over year. I think what's an important aspect is how the labor market recovers. Mm-hmm. So right now we're seeing very good employment numbers. We're seeing fantastic job growth, and that's important. But one segment of the economy that hasn't recovered, or I should say the labor sector that hasn't recovered, is part-time workers. Mm-hmm. We are seeing just not a return to part-time work. And there are good parts and bad parts about that. One good part, it is spurring wage growth. For the first time in 40 years, we're actually seeing real wage growth, which is fantastic. Mm-hmm. That is driving inflation. That's people buying more. That's going to increase inflation. Income increases, inflation increases, and it's a good thing. It's not a bad thing. But my concern is stability. If markets can return to an area that you don't see aggressive quantitative easing, you don't see different aspects of the economy almost still recoiling from the effects of COVID. Mm-hmm. Once that happens, you'll start to see a return to normal, in my opinion. You'll start to see managed inflation. You'll start to see consistent wage growth. But we're still a ways away from that. I think we're probably 2-3 years away from that. That's, again, referencing that Romare tax series. That's one of the best models to look at how long it takes places to absorb, how long it takes the economy to absorb public policy changes. So I'm optimistic. I think most economists are optimistic people. So I think it's going to get better. I think it will continue to get better. But I think we're in for a little bit of, up and down on the inflation side over the next, probably 3 to 5 quarters.
How about just the overall equities?
I think it's going to go up. I think there's a real high pent-up amount of demand.
Really?
Yeah, I do. I think one of the best statistics to look at is marginal propensity of consumption. So if I give you $1, how much do you spend? Mm-hmm. So if I give you $1, you spend $1.10. Boom, you're going to see that your marginal propensity of consumption is 1.1. This wage growth is the backbone of good growth. How it's going to translate to equities? It could be up and down. Like I always say, like I'm an economist. I'm not a CFA. Those guys, I don't know how those guys do their jobs and don't throw up in the bathroom every 20 minutes.
Oh God!
I learned option trading. I learned derivative trading and all that modeling, and I just can't use it because I just don't have the risk tolerance for it. This math is fun. I don't want to use it at all.
Yeah, that's my struggle with futures in a nutshell, right there. Yeah.
I'm optimistic. I think we'll see growth. I don't think we'll see 20% growth year over year, but I think we'll see stable growth going forward. I'd say probably upwards of 3 to 5%. Again, hopefully better. Again, I'm usually pretty conservative.
That makes me happy to finally see somebody who's got a more rosy picture to paint for the next little bit coming up.
You can't sell papers on positive news.
Yeah, that's a good point.
I'm nothing to sell, so it doesn't benefit me to scare anybody.
Too bad everybody reads the negative headlines, and they're the ones who act. God, you keep mentioning labor, and I'd feel remiss if we didn't ask about the Great Resignation and whether you think that the reports of that were overblown, or are people actually leaving the workforce and deciding that they really don't need to be in there. Is that what's driving all this wage growth?
Yeah, so that is driving a lot of the wage growth. Anytime you see what we call switching in economics, that's when people change decisions. You actually do see a lot of efficiency gained with that. You see people more optimizing what their top income level. No, I really do believe it. I think there's a decentralization away from downtowns and stuff. And I think when you remove businesses, $30 a square foot a year to have office space, they can pay their employees more. They can transfer that money and employees can work remote. One of the big things is that because people aren't commuting, which is 2-3 hours a day, that's a lot of economic production. Mm-hmm. They're putting that towards other economically positively producing activities, which is creating more money, which they can then spend more. there's a dirty, dirty secret in economics, which is that we've known since the early 2000s that you can work at home and be very efficient, if not more efficient.
Are all economists working at home and we're just all catching up?
Yeah, I mean, work is a very loose standard.
Your secret's out.
Yeah. I put a bunch of Greek letters on this page. Yeah, I called good for a day. No, but the Great Resignation's real. It's a fascinating time to be, it's going to provide, fuel for my field for the next, decade in terms of what we're going to be able to write. But no, it's real. They're looking for new jobs. They're confident that, if you live through a pandemic, you're pretty confident switching a job, probably.
Right.
Yeah. My biggest concern with the Great Resignation is it's going to leave a lot of people who are structurally unemployed in the aftermath, people who have lost skills that are never going to be able to recover them.
Ooh, yeah, that's my fear too. from trying to, I'm part of the Great Resignation, I guess you should say.
Yes.
Dan and I both decided to try to go professional trading stocks. So,
good for you guys.
The longer it draws out, then the harder it's going to be to go back to work, I think.
Yeah, definitely.
But I'm not going to fail.
I was going to say that isn't that the goal in life in general? Just make it hard to go back to work.
Yeah. I figured might as well try, give it a shot.
Well, let me ask you guys this: what made you want to jump into such a risky field?
It was the first time I ever felt passion for anything, because we were doing it part-time and then trying to balance doing that and the show. And so to finally find something that I wake up and want to do every morning, I just couldn't do the other job anymore.
That's perfect. That's absolutely, in economics, we talk about utility. What makes you happy? So you made a smart decision. Let's be honest, you're probably happier than you are now, like you just said. And that's actually good for the economy. Happier people make better decisions and they're more optimistic in their consumption habits.
There's the tagline. Dan, we made the economy better by quitting our jobs.
Yes, we did. Yes, we did.
I'll give you a stamp for that.
Yep. I'm going to snip that. That's going to be part of my morning routine. I'm going to listen to that as my prep. That's right, Kyle. You're doing good.
Doing good.
I got myself on the back with that one.
Yeah. The only thing that would make it better is if you had quit a marketing job.
Oh, yeah, right.
I'm going to get so much shit for that. It's nothing against the field. I think the field's fine.
It has its place. It has its importance. And there definitely are benefits to it.
Mm-hmm. I'm speaking at the World Finance Forum in April, and I can't wait for the first marketing guy to come up to me and just punch me in the face for saying this.
Are you presenting an anti-marketing presentation?
No.
Okay.
They all listen to our podcast, Kyle. All of them.
I show up, light a cigarette. Listen.
All your jobs are stupid. And just drop the mic and walk away.
You have no purpose.
I want to be very clear that it's not my opinion on that.
Yes, we know.
Any trades you make are your own trades.
Maybe we'll edit that a little bit.
Oh no, that's the goal.
I was on a trading podcast a little while ago, and they asked me what's one of the best things to invest in? This is a year and a half ago, and I go, I don't make investment decisions, but we have a lot of fiber optic that's getting built out. It's and especially with the new stimulus plans. I go, so any company that deals with helium, because fiber optics need to be made in a 100% helium environment. And I got so many. I got like a good amount of emails and LinkedIn message of people just getting frustrated with me because I didn't name a helium stock, and I was like, I don't like helium stock. What does that even mean? What's a helium? Next
time someone asks you that question, just say yourself.
Yeah. It's in a balloon.
Yeah. Invest in yourself. Get some education. Learn something. That's the best thing you can do with your time. Dan, do you have anything else that we need to cover? Because I don't think I can laugh anymore. I'm out of breath.
I mean, I have some more provocative questions, but
are they personal in nature?
Yeah.
God damn. Who knew economists could be funny?
Yeah, right.
We're depressed. It's a dismal science.
I want to be in like the Powell's meetings after he finishes talking to the Congress or
oh, and the whiskey comes out.
Yeah, when he's telling everybody what he really thinks, and they're all actually laughing and having fun. He's like, "Can you believe I told these fucking idiots inflation's transitory? It doesn't even mean anything."
One of the things we do in economics, anytime something good happens to one of us, we tend to send each other alcohol, usually whiskey.
Nice.
So one of the most influential economists in my life, when he got promoted to be the dean of his school, I sent him a big bottle of whiskey, like nice. He loves whiskey, and the thing, he was on vacation, so it sat in his inbox with a giant tape around that said alcohol for like a week and a half. He's like, I feel like that was a little inappropriate. Like, sorry.
Yeah, well, don't go on vacation. All right, Eric, where can people find you if they want to hear more?
LinkedIn is always the best way. That's where I circulate, any article I publish, show them on, or anytime I'm doing anything public, I tend to keep it on there. I'm not a big social media user. But yeah, that's the best way to keep up with me. And I try and answer every LinkedIn message, unless you're asking me about a helium stock, then I'm probably just ignore you at this point.
You're going to get...
I'm going to get so much marketing hate email. It's not going to be fun at all.
Hopefully there's not helium. Hopefully there are helium marketers.
Guys selling me hot air balloons. Jeez. But yeah, that's the best way to find me. And I try and be as open and transparent. I share everything. I thought probably too much, but yeah, that's the best place to find me.
Well, thank you so much for your time, Eric. This has been a lot more fun than I was expecting. And when you hear the term economist, it's like we were talking to some of the financial advisors, and they're like, God damn, these people are fun too.
Yeah. I do like FAs. Very positive on FAs.
Dan, you want to take us home?
All right, folks. Thanks for sticking around to the end. Another fantastic interview. I would love to just stick around forever. We definitely want to have you back on again sometime, Eric, for sure. Thank you again for coming and being such a great guest. This has been such a great time. Thank you, thank you, thank you.
Well, thank you for having me, guys.
All right, and I normally like to ask Kyle to try and give some wisdom to top the guest, but I don't think you got anything, Kyle. So I'm going to skip that.
I'm not topping any of that.
We're just going to skip that.
The day I do top a guest is going to be something else, though.
I can juggle better than you.
Bye, spy. No.
Oh, yeah, we'll be coming back at you soon with another exciting episode. So until then, happy trades.
Bye, folks.
Two Bulls in a China Shop is an entertainment program, and all thoughts and opinions expressed in the show belong to the hosts and not of any company. They are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide entertainment about stocks in the financial industry of trading. If you make trades based on what you hear in this show, you assume all risks for those trades.